You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time for the funkiest show on the network. Certainly today it's going to be. Yes, it's time for TWIFO. This Week in Futures Options. And I guess you can put "and other" at the end of that today, because we're going to talk a little bit of some other, because a whole bunch of you really want us to. So, you guys dictate the show at the end of the day. You ask, you shall receive. Consider this an early Christmas present for you. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever fun, ever scintillating Options Insider Radio Network. You guys know the drill. Wherever you're listening now, make sure if you haven't already, head on over, subscribe to the full network feed, not just TWIFO, but the whole kit and caboodle. Vol Views, Option Block, Advisors Option, Daily News, so on and so forth, Trade and Tech, all that good stuff. If you haven't subscribed to the full network, you're missing it all. Then, of course, wherever you're listening, if you like what you're hearing, leave a nice little review over there. A few stars send our way. It always helps with those aggregators when it comes to reviews and for searching and all that other kind of good stuff that goes into those garbage search engines that drive the podcast machines out there. And of course, for you hardcores out there, we also make it available live. For those of you who don't want to wait for the on-demand version, every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, via Mixlr, MIXLR. I know Mixlr has been a little bit wonky the last day or so hopefully they fixed out their issues with their servers. If it does go down during the stream, listeners, just stay in there. We'll try to reboot it, get it going for you again. Hopefully they seem to have worked out their issues. Fingers crossed. We'll survive the full hour here. And of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom, comments on Bitcoin. I know you guys got them. We do actually like to hear from you guys. And joining me on the old program today, the counterpart to my light side of all things futures options, the founder of Bantix Technologies, creator of a little platform we've used once or twice around here called Quick Strike, Mr. Nick Howard. Nick, welcome back to the show, sir. How goes the snow out there? You guys getting snowed in like we are here in downtown Chicago?
No, nothing yet. We got pretty good looking weather out here.
I don't know.
I'm not
personally...
No snow. I've heard it's only on the lakefront. I looked at they said it was a weird pattern where it was actually moving back west as opposed to going toward the east. It was moving like back over the lake and west.
You know, it was just 75 degrees like a week ago here, so I'm not mentally prepared for snow. So we shall see. But with the team assembled, let's just dive right on into the TWIFO madness. Nick, it's going to be kind of easy to figure out what we're going to start with this week, don't you think?
We are going to look at cheese, right?
Yes, cheese,
cheddar
fluid
cheese.
milk, class 3 fluid milk is what you guys wanted. No, of course, I'm joking. Our friends over there at CME, of course, this show also brought to you by CME, so if you want to head on over, you want to follow along with what Nick and I are talking about as we do it, with the possible exception of Bitcoin, we'll get to that in a second, then head on over to cmegroup.com/TWIFO, TWIFO. That's, of course, the acronym for the show. And you can generate your own reports live while we're doing the show, or, of course, after the fact. If you listen to the podcast, you can see exactly what we're talking about. Make sure if you're listening to the show and you want to see exactly what we're seeing, then make sure you change the settings to the previous week so you can see exactly what we got. But otherwise, head on over there, kick the tires, and light the fires. And Nick, our friends over there at CME, they like to ask you guys, their full audience over there on Twitter, 750,000, however many they got over there, many people out there on Twitter, they like to ask you guys what you want Nick and I to talk about every Friday. This week, they gave you guys 4 choices, and you guys responded en masse. They gave you nat gas, the Russell 2000, WTI, our old friend crude oil, or in the last spot there, they put the old Bitcoin. Mr. Nick, go out on the limb and take a guess. These 750,000 people out there looking at this. Guess what they all voted for?
Yeah, I know it's Bitcoin, but it's funny. They just want to talk about a number, and there's nothing to talk about yet until those futures and options are out there. But I'm sure they want to talk about Bitcoin.
They want to talk about the old BC, the old Bitcoin. 82% of the votes, just crushing everything else. WTI only getting 5%, usually our leader. The Russell getting 6%. Nat gas getting a little love with a whopping 7%. 82% wanted us to talk about Bitcoin. Now, that puts us in a bit of a quandary because the show is called This Week in Futures Options. And as you know, there really are no futures options yet for Bitcoin, but we can improvise. In fact, we did reach out to CME, have their guys who are spearheading. Of course, they announced very recently, last couple of weeks, that they are going to be launching a Bitcoin cash-settled futures coming up in the near future, pun intended. Of course, just the news of that announcement led to a lot of people really diving into the product. The largest U.S. quote-unquote exchange for Bitcoin out there saying they added 100,000 new users immediately after the future CME made their announcement. So the notion of a legit player getting into this space is exciting, I think, a lot of people. So, Nick, I think we'll just get into some of the nuances here. They have explained more information about what they're bringing to the table. And you can always talk about what data you see over there on the old Quick Strike as well, which isn't much yet, obviously, because we don't have the options out there yet. But what we're talking about here, of course, is what CME is going to be offering these futures on what they already kind of disseminate now, which is what they refer to as their Bitcoin reference rate, or the BRR. If you're not familiar with that, what that is effectively the U.S. dollar price of a Bitcoin as of 4 p.m. London time. And what it does is it's essentially an aggregator. It aggregates the prices of Bitcoin across the kind of leading venues out there, and it does it over slots of time, 5-minute intervals between 3 and 4 p.m. London time, to put together this kind of aggregate price. Because if you know anything about Bitcoin, and a lot of you do, you know it's kind of a fragmented marketplace. There's different venues who offer different rules of execution, different sizes, different prices. It can be very confusing. It's not like you go to CME, look at WTI, you can reliably hit that bid. You know what's there. It's listed, it's disseminated, it's easy to find. Bitcoin, it's a challenge. So this methodology attempts to work around that by taking all these many disparate marketplaces, sampling their prices between 3 and 4 p.m. every 5 minutes, and then taking an aggregate that is then partitioned, again, 12 intervals of 5 minutes each. They volume weight the median price there to get for all of what they term relevant transactions. They must have some size limit goes in there, and that volume weighted median, they compare that to the standard medians. A whole bunch of methodology that goes into that. Then that Bitcoin reference rate, that BRR, is the equally weighted average of the volume weighted medians of all the partitions. Say that 5 times fast. And how does this come out? It comes out once a day, every day, again, between 4 and 4:30 London time. So that's kind of what we're talking about for kind of the core mechanism, the core underlying for these forthcoming futures contracts. A little bit more about what they're actually talking about. They released some specs this week as well. And again, we'll get someone in from CME who's actually spearheading this maybe on the show next week or a couple weeks from now. They're in London today, as you might not surprise given the fact that it's from London time. So they couldn't come on today, but they can always provide a little bit more specifics about exactly what they're bringing to the table with this as well. The contract size, a lot of you guys are asking about this. It's going to be 5 Bitcoins, which currently the Bitcoin reference rate as of today, $6,811. So you're getting 5 of those bad boys. So it's a meaty contract. Again, that's determined by the Bitcoin reference rate. There's position limits. A lot of you guys asked about that as well. 1,000 contracts with an accountability level up to 5,000 contracts and a reportable level of 25 contracts. This is also kind of interesting as well. One of the things people have been excited about a real quote-unquote real venue coming to the Bitcoin marketplace as opposed to these various kind of spot OTC, exchanges and air quotes, is that, we're seeing this product is crazy. It's moving all over the place. The volatility is off the charts. Maybe not as high as we thought it was, Nick. We kind of talked about it on the show last week. I think we have a listener question about that. We'll get to that in a little bit. Some people thought it was a lot higher. I think myself included, but it worked out, I think, about somewhere in the 60 to 70 range. But that said, this thing has been known to have massive swings, 40% in a few sessions. That's just not tenable, really, for an asset for the broad investing public, let alone for funds and things like that. So a lot of people are excited that the notion of putting this on a listed, lit venue with all of the kind of safeguards that are built in there will help tamp down some of that craziness. And according to this specs, they're trying to do just that over there at CME. They're saying the special price fluctuation limits were going to be equal to about 7% above and below that kind of Bitcoin reference rate settlement price, and 13% above or below the prior day settlement price, and a net price limit of 20% above or below the previous settlement price. So that 20% is kind of the outer band. Will not be permitted outside of that 20% above or below. So if we get another Jamie Dimon spouting off about how Bitcoin is a disaster, it's not going to sell off 40%. The most you can get is 20% with some maybe 7% fluctuations therein. So that seems to be exciting a lot of people. As we said, 100,000 people flocking to the largest exchange here in the U.S. to do these things. And a lot of people have saying there's been a lot of articles, post this announcement as well, Cointelegraph and others, hoping that this kind of launch of these futures is going to do just that. It's going to kind of step in and really backstop this currency, or currency, again, in quotes, but again, kind of tamp down some of the volatility. That may take some of the bloom off the rose for some of you out there who like that it's the Wild West, but if you want to use this as an actual tradable asset, if you want to hold it in accounts, let alone retirement accounts or anything like that, and you want to be able to reliably hit a bid when you want to get out, then this is exactly what you want. You want something like this, a place that can stand behind the quotes. You can hit them, you can go. They're not going to get taken down by some crazy, overseas regulation, or it's not going to be a loss or some sort of, legal thing that comes in and shuts down this venue. They're going to be there to hit that bid. So that's a good thing for a currency like this. And again, people are flocking to this, Nick, and just as evidenced by the many, many hundreds of thousands of CME followers who all wanted Bitcoin this week. It clearly is resonating. What are your thoughts here on maybe kind of the impending launch of these products, these futures, hopefully by the end of this year, as well as the just some of the impacts? Are you one of the people who's thinking that perhaps these listed products are going to maybe calm down the Wild West that is Bitcoin a little bit?
Well, I think that was probably part of the reason that they looked to try to list it on the exchange. So I'm sure that's going to be one of the byproducts of the future. In all likelihood, that gets launched in December. That just assumes, though, that people treat the futures market as the de facto trading market, right? There's still going to be people who are trading their spot coins potentially, or maybe not. Maybe that becomes limited. Now, remember, it is a limited asset, right? There's only so many of them out there, so they'll be able to, hedge their holdings or speculate on price, whichever one obviously you want to do. But I think it's going to just be something that we're going to have to wait and see what happens. There's plenty of places that have charts and are trading it and that kind of thing. But, we're going to, we'll be ready to go when it gets listed, and we'll just be showing the charts and the futures, and we'll probably try to do some implieds based on the futures movement. We'll also have some data from Terra Exchange as well, which will have a USD, a euro-based one, and a yen-based one. So we're going to try to. We've been trying to get in front of it for months, and that's why we have information from elsewhere. And then we'll obviously be, applying that, applying our quick strike methodologies against the new Bitcoin stuff, and trying to get ahead in terms of the options pricing and those kind of things based on the futures movement. So, I think the stuff that's probably fun to talk about is just how they came up with the contract size and that kind of thing. I mean, I was kind of surprised when it said 5 Bitcoin. Just seems like, I wonder what the rationale for that number was.
That seems like a meaty contract.
It does, right? Well, it's meaty now, right? So maybe there
exactly.
was,
if it's $400 in a few months, it won't seem that meaty.
If it's $2,500 then, but at the same time, what if it keeps going and then it becomes a $100,000 contract or whatever the case may be? But I probably think there was a nod towards the future of this thing getting, tamped down a little bit. And I think that was, again, why you would want to tamp it down, I'm not exactly sure. It is a limited asset, but at the same time, the usefulness for it as a value store or anything like that, in terms of, its relation to, like, people are saying it's going to take over gold in terms of being a value store. I just don't know that people are ready for something that's not like that they can hold in their hands, right? It's just still sort of this. They call it it's a digital asset, right? Digits are made of ones and zeros. You don't hold them in your hand. They're on the computer. So that part of it to me is interesting. So, if it's a number that whips around and there's some trade, I think it'll be cool. It'll have volatility, and it'll be like we talked about. We on some of the numbers that we looked at with the general Bitcoin price movement, we saw about a 60 to 70 at the money volatility, and then we saw about 110s, 120s in the 25 delta calls and puts respectively. So, it had a nice smile to it. Now it remains to be seen whether, what the deal is in terms of how that thing's going to trade. We've talked about it. Is it going to trade like an index or an asset class and stuff like that? So, I'm not 100%, and that's probably what people want us to talk about, is just the speculation of what we think the product's going to do in terms of, future. I think there's I looked sort of close. There's 4 contracts because it's in the index asset class. I don't think we mentioned that. That's in the index asset class. Index asset class have 2 quarterlies and 2 serials. So those will be the futures that are available. And I'm assuming it'll be very similar to how those trade, in that the front month will have a majority of the open interest, and then there'll be a roll. So that'll have to be a really interesting roll period too. So there's all kinds of fun things to look toward. And then there's the spread, which will be a little bit crazy, which will probably give more open interest to the secondary quarterly, the second quarterly, or even to the serials, right? So maybe that's the idea behind the serials, is to give people the chance to trade some spreads. And then there's that trade on close, the BTIC contract. I don't know a great deal about that. I know that indexes have those, but I'll have to start paying attention a little bit more to those and see whether I think that is going to be a place where a lot of the trade takes place as well. But, I mean, I'm not a great margin guy, so I'm not 100% sure how the margin works, but you got a pretty sizable contract, so there's going to be some margin on it, especially given the wildness of the swings. The interesting thing is, right, and I don't think we've talked about this or anybody has brought it up to this point. A lot of the trade on the Bitcoin, you don't see people trading full Bitcoins, right? You see people trading fractions of Bitcoins because they're so high, and that's kind of the nice thing that exists on exchange. You could buy, I think it's called, the smallest amount you could buy is like 1 Satoshi, I believe, and that Satoshi, which is a 0. I think it's either 5 zeros or 6 zeros and then a 1. I think it's 5 zeros and a 1. That's the smallest value. But here, you're leveraging 5 Bitcoins, so that's probably a lot bigger in just pure size than most people are trading out there in the exchange, in the actual spot exchange themselves. So all that stuff, and you can't trade fractionals of them. That's why I was surprised it wasn't a one Bitcoin, right? Because that seemed like a big enough thing. Even if it got knocked down to $500, it's still a decent sized contract. But it's 5 Bitcoins, that size, you're leveraged pretty good. So a lot of fun stuff to talk. At least it's one of those things. It's all kind of just speculation until we see what goes on.
Yeah, it's been fascinating to watch. We talked a lot about what the skew would look like. We've been debating. I think initial blush, if you leave the crazies out, you think it might look like an index because people want to hedge and they're very long, so the puts would look juicy. But then you start looking at what people are actually using this for, which are they get into the zealotry of Bitcoin, and we have some of our polls to that effect as well. You got to kind of wonder if those calls wouldn't be bid to high heaven. Speaking of which, Nick, we did ask our question of the week last week. We touched on it last week. We didn't have the final numbers. We have the final numbers now this week. We asked everybody last week. Last week, of course, Bitcoin blew past the 100 billion with a B in market cap for what it's worth out there. So we asked you guys. You guys are all asking about Bitcoin options. If they were available out there, if they were listed right now, how would you trade them? Would you buy calls or call spreads? Would you buy puts or put spreads? Would you turn around and sell covered calls, maybe looking for a little bit of a liquidity event? Or are you just, I'm done with crypto, I can't stand it, I hate my crypto? Mr. Nick, we talked about last week, I said we have the actual numbers. How do you think our hardcores came in on this one, sir?
Well, I think my vote was covereds. But I don't know. I think wasn't leading the pack by calls and call spreads, so probably where it is, right? So what do you got for us?
Well, yes, the numbers are in, and it's. I kind of thought, I was with you. I thought selling covered calls would be a little bit more attractive because one of the common refrains I hear from a lot of people out there who hold these products is that it's hard to get an exit on these things. So having a covered call, getting paid to do it, taking advantage of that skew, which probably would be pretty juicy, probably would be an attractive thing. That said, not so much. Our audience, 52%, Mr. Nick, want to buy calls or call spreads. That's all they want to do. They want to buy this thing. 18% saying they want to buy puts or put spreads. That's number 2. Only 13% saying selling covered calls. It's beaten by 17% who say they just can't stand themselves the crypto. They want no more of it. So there we go, Mr. Nick. I think that data feeding into what you're seeing, I think that's going to lead me to believe that this call wing is going to be pretty juicy when and if we do actually see some Bitcoin options, hopefully maybe sometime next year. And then I think if that's the case, I'm thinking covered calls are going to look a little bit more favorable. What do you think?
Yeah, I think so as well. But again, you just gotta look at it too. If you're selling coverage, that means you gotta own it, but you also can sell coverage against the future as well. So yeah, it's gonna be interesting. I don't know. I think that if we keep getting the same kind of, I don't know. The exchange hasn't seen anything that whips around like that in a long time. So if we keep seeing stuff whipping around like that, there's going to be opportunities to do some stuff. But if you're making markets in this, can you imagine how wide they got to be? Especially in a new underlying like that, it's going to be really kind of strange.
We got Matt Stankiewicz chiming in here. He's listening. He says he thinks it'd be a huge put slope. I'm with you. That was my first blush as well. But like we just said, all the data seems to be people who are playing in this right now. You got to kind of be a hardcore to play in it to begin with. Maybe a big exchange like CME bringing it to the masses, maybe that will change that. Right now, you got to be pretty diehard to really be slinging this thing. So that probably is a bit of a sample bias there as well. But that said, it's got to be call frenzy. In which case, I won't get to it. We have listener questions about that a little bit later too, about collars and whatnot in Bitcoin. But yeah, it's going to be all sorts of crazy. Of course, CME probably going to be the first out of the gate. SIBO announced themselves a few months back as well. They were talking about, we have an interview with that on our network if you're interested in that. So they're both looking at the cash settled futures range. CME still seems like they're looking towards the end of this year, so maybe they'll be out of the gate first, and we'll get a chance to see how some of this really plays in the marketplace. If you guys have more questions, hit us up. We'll try, like I said, we try to get on future shows someone out there who's helped structure and create this product at CME, so they can talk a little bit about maybe what we were just referring to, why they went with 5 Bitcoins, for example. Maybe is that too much for your needs? Is that just right? Is that a Goldilocks size? What do you guys think about that? Let us know. Meanwhile, we got to keep on rolling with some. There are actually other products out there to talk about out there. Surprise, surprise. Let's kick it off. I don't know, let's pull off, it was on the list. People did like it, this thing. Oh, Nick, you got more? You got more on Bitcoin before you see here I am trying to segue off Bitcoin, and you just won't let it go, Mr. Nick. You love it. You got crypto in your blood, sir.
Right. No, but you know what I like about it is that Matt said that he thinks it's a put slope, which means he thinks it's going to trade like an index as well, right? And he's been on the floor for a long time. So,
yeah. I think people who've been around for a while, I thought the same thing. I think that's your first blush. Then you got to factor in the zealots, and those people, they're going to do what they're going to do. So I got a feeling covered calls are going to be juicy in this one, sir.
Yeah, no, but that's why. I mean, we talked. We had said it before, and then we'll move on. We had looked at the distribution of the S&P or the SPX price movement, and the distribution is very similar in the Bitcoin price movement in terms of occurrences up, above current, and below current, right? Just in terms of returns per day. I should say the distribution of the returns per day, right? So they had a very similar plot to them, which gives them a very similar shape, right, from an implied volatility curve based on those returns. But the S&Ps, they have the huge put slope, like Matt references in his tweet. So, and it just feels like that because the CME probably didn't make a light decision to say this should become a commodity, right? Even though it potentially could have been in anything but the energy asset classes, more than likely. But they put it there because they think it's going to act like an index or be like an index, and frankly, it is an index. So, it'll be interesting if we can get more people with trading experience, floor experience, and stuff like that to weigh in. I don't know who the people are that are weighing in. Do we have more retail people, and people are just not used to seeing the bigger picture from being on the floor all those years or from trading the different products, that kind of thing. So, I hope we get more comments as we go forward.
Speaking of comments, I'm just putting it out to our audience what they think. I'm going to have them chime in on what they think this skew will look like. So a reason to tune in live if you're not doing so already. Let's see. Let's make it really quick. Let's make it just for an hour during the show here, Mr. Nick. You guys can chime in. What do you think the skew is going to look like? Let us know your thoughts. I got a feeling I know how this is going to land, but you never know. Plans always change once they engage the enemy. In this case, the audience. Let's keep on rolling as you guys get your votes in for all things Bitcoin. Let's move on to our old friend WTI. Yes, crude does continue to trade outside of all the Bitcoin fascination. WTI continuing to the crude bulls are happy this week. Premium buyers also a little happy this week. Spoiler alert there. The bulls, the crude, the futures up about 1.5 handles, firmly well north into the 50-odd handles, now 57 or so out there. So for all of you who thought maybe the low 50s was a ceiling, going to retreat back down to the 40 handle, not so much. The rally continues, and surprisingly, usually upside rally in WTI means vol coming off a little bit, but people obviously have been bidding up these near-term calls because vol getting a little bit of a bid, and at a certain point, how much lower could it go? I mean, obviously, historically, it can go much lower, but in the near term, rationally, how we're looking here, it seemed like it was getting fairly low, and people bidding it up, and all the people who've been writing in for the last, for months saying, hey, what about crude vol? When can it catch a bid? You're happy this week. You finally got a smile on your face. Who knows if this is the question for crude has always been, can it sustain this vol? And so far, every week, the answer has been a resounding no. Once the move slows down or dies, bam, the vol gets crushed again. So we'll see if it plays out again next week or if this vol bid can stay. But so far, a couple of aberrant scenarios. Upside move in crude along with an upside move in vol. You don't see that very often. So the skew getting a little funky out there. Let Mr. Nick break that down a little bit. When we get to the quick skew, I'm going to go out on a limb and say people in the near term buying some calls. In terms of what actually has been lighting it up, again, it was mostly front month with DEES accounting for about 46% of the overall paper out there. And since we passed through the double strike, that was the one that was catching everyone's eye, as well as the 60 strike as well. The double puts lighting it up this week to the tune of 60-odd thousand. By the way, worth pointing out, open interest up another 5% this week. So options going strong out here in WTI land these days. 60,000 of the double puts in DEES, the front month here, with about 20 of that 60,000, about a third coming on Tuesday, 16,000 on Thursday, about 10,000 on Wednesday, and the rest kind of scattered throughout the week. About that, of that total mass, about 10%, 6,000 was actually net opening on the week. So a lot of back and forth on this double put. It's not surprising as you blast through that strike, it becomes an interesting strike. A lot of people. Also, the crude bulls not deterred, piling in, trading, slinging, closing actually on the 60 strike for some size this week. 56,000 of the 60 calls lighting it up, including 30,000 of them lighting it up on Monday. The rest kind of scattered throughout the week. So just a lot of action on the 60 calls this week. Surprisingly, about 10,000 and change that actually net closing. So maybe some people taking some calls off the table after this week's pop, taking some premium off the table. We're also perhaps a little scared. Maybe they're coming to close out some covered calls they were selling up there. Either way, a lot of closing going on that strike. Let me drop off a little bit to the 59 calls. Still pretty optimistic, still pretty rich. 43,000 of these bad boys lighting it up this week. The lion's share coming on Wednesday. 14,000 and change lighting it up. Almost 11,000 on Monday. The rest scattered throughout the week. Of that 43,000 and change, about 7,000 closing on the week. So a lot of closing positioning on the call front this week. People taking some of their money and perhaps running out here. Then we drop off a little bit again to our number 4. Actually, number 4 is a bit of a tie, pretty close. We'll start here in DEES, the 56 puts with 30,000 and change. The lion's share 9,000 coming on Tuesday, and a total about 5,000 opening. But also, if we go out a little bit, actually to these are out here in the Jan. We got the Jan also trading up a storm. The Jan 60s, 30,000 of these bad boys going up. The lion's share, almost half coming on Monday, almost 14,000 going up on Monday. The rest kind of scattered throughout the week. Like I said, total of nearly 31,000, about 5,000 almost closing on the week out there. So getting a little play into 2018, which is always nice, but it's getting to be that time of year. We're getting a little late in the season, so people are going to roll their stuff and play out a little bit farther afield. Speaking of farther afield, if we go all the way out to Feb, all the way out that far to Feb of next year, we see the 70 calls lighting it up to the tune of about 12,000. Pretty evenly split throughout the week. Of that, about half of that actually opening, so some new opening position on the 70 calls. Maybe the crude bulls getting a little bit emboldened by this recent price action. If that wasn't enough action for you on the 70 strike, well, then just head on out to DEES of 2018. Another 10,000 of those bad boys trading it up out there. The lion's share actually coming today, about 5,000, about half of that coming today. The rest scattered throughout the week. About 2,100 of that actually opening. So a lot of interesting churn on the 70 strike all the way out to DEES of 2018. That seemed maybe a little outlandish, Mr. Nick, a month or two ago. All of a sudden, perhaps not quite as outlandish as it seemed. And if we keep going farther out, all the way out to DEES of 2020. Yes, all that way out. We saw someone playing out here in the DEES 2020 80 calls to the tune of 1,000, 500 on Monday, 500 on Wednesday. All of that opening. So someone opening on the Dees 2020 80 calls out here. Interesting paper across the board. Be interesting to see some pricing on those, how much those are actually going for. Mr. Nick, a lot to unpack out here in crude this week. We got skew, what's going on in the front month, what's going on with the vol. What else is catching your eye out here in WTI this week, sir?
Okay, so if I pull up last week's This Week in Options and I compare it to this week's This Week in Options, we basically are seeing that anything we lost from a vol standpoint, we recovered this week for the most part. And that's, probably sort of true in the first 4 or 5 months, maybe not as much true out on the term structure out the May, June, and the December contracts that we have showing by default out here. As far as anything interesting, the one thing I noticed is last week our overall put call ratio for the expirations that we have in the system, which are about 3 years worth of expirations, which are going to be the bulk of where the open interest is, even though there are probably 10 years worth of options. We had the put call ratio go from 1, which was pretty even, to 0.71, which again, it's the put call ratio. So it's puts over calls, which means that we lost some put numbers and we gained some call numbers. Even though, like you mentioned, I had noticed the same thing with the upside, that there was a lot of closing on the 60s last week and this week. So a bias toward calls now in the open interest versus flat before. And again, it's a little, I don't know if it's a lagging indicator or a leading indicator, but if you look at the strike-based vol curve right now, if you purely look at the strike-based vol curves, they have a pretty, I see them as having a smile, more or less, okay, when I look at the vol chart. And it might be a little bit crooked, but it's still pretty smiley. When you look at it from a delta standpoint, it's got a little bit tilt to the put side still, and that's partly because the belly of the vol curve isn't quite at the money. It's a little bit, it's 2 or 3 strikes up, but when you look at it on a strike base, if you didn't have the futures marker in there, you would think that it looked like a pretty balanced curve. And I think based on the fact that we have we turned our ratio from puts to calls, or from flat to calls, it seems to be sort of supporting that our vol curve looks a little bit more like a regular smile. And people typically, when they think of the smile, they're looking at the strike-based curve, but you really got to take into account where the current underlying is. And if you take the current underlying into account, then we do have a tilt where the puts are bid and the calls are offered. And that's why we have the quick skew, because it's telling us, when we look at our numbers in the chart, we're seeing the puts, like we'll start in January, because December's got 5 days left, and we kind of start to ignore the skew at that point. But for the Jan, which is 34 days till expiration, which had 40 days last week, obviously, or 40 days when we started, we saw the puts go from 6.5% rich to the at the money to 2.3%. We saw the calls go from 5% cheap to almost flat to the at the money. So we're kind of, we see the action in the put call ratio, the change in the open interest, and the vol curve all sort of supporting the same thing, where we're moving towards a more balanced, hey, we can go anywhere type of thing. I know people want the prices to go higher. I know that there's people are trying to push that OPEC rhetoric. I saw a note on Bloomberg today that said they think Brent potentially over 80 by December. Brent is $4 above where WTI is, or $4 and change above. So we're getting a little bit more of that balance. So I don't necessarily think, I don't think there's probably more of an upside bias than there was, whether it's just a full-on bullish market at this point. I don't think that's the case, but we definitely have, in all of the quick skew numbers, when we start to look all the way out, even through to December 2018, we see that the curve tilted back towards the calls a little bit. And the short term, which is our standard sort of 30-day contract, this is probably as tight as we've seen it in a while. And I'm going to look at a 30-day quick skew here in a second. There's my, so if I look at my January contract, this is as tight as it's been in a while. And what I'll do is I'll push out a quick skew for the 30-day crude contract. And I'm guessing that we're going to see things pretty tight from a quick skew standpoint. So those are the things that really caught my eye more than anything else. And, I think it's anybody's guess at this point of where we're going to go. One other thing I want to touch on was reviewed a little bit on Monday for something else. We saw, we had the 50 strike was our big strike from an open interest standpoint, then our 55, and then our 60. So last week, prior to the 3% move late last week, we were kind of bouncing, or we're kind of hitting the 55 barrier. We got through that barrier and we ran up almost to 58. And now the next highest strike after the 55 from an open interest standpoint, probably as an aggregate, is the 60. So again, I think what we're seeing is that we've kind of shifted that range up. 50, I'll be surprised if we get back down to 50 real soon, but now we're going to have 55 as our first support and then 60 as our next resistance. So if we got through 60, we might see a big push up, I would think, just based on the fact it's pretty thin up there from an option standpoint. But again, it's fun to see all those things sort of come into line, the ratio, the way the vol curve looks, and the quick skew.
All right, Mr. Nick, we've been talking a lot just on these two products. Let's segue into some winners and losers here on the week really quick, then we can get into some of what the audience has cooking, because they got a lot of questions as well. Looking back on the week, you guys can run these scans yourself over there on Quick Strike. If you head on over there to the market scans and then check, these are obviously by underlying movement. We're not breaking it down any other way. Nat Gas lighting it up again this week, nearly 11%. Lean Hogs, number 2, 7.72%. Number 3, KC Wheat, up 5.3%. Lumber, number 4, about 4.5%. And round out the top 5, iron ore up a little north of 4%. On the downside, our old friend, Class 3 milk, taking on the chin this week, off about 5.7%. Number 2, feeder cattle, 2.7%. Rough rice off 1.5%. And then corn and copper both off about 1 and 3.3% to take the bottom 5 there. Mr. Nick, I'll leave it up to you. Do you feel like breaking down another one, or should we got so many questions? Should we dive into the questions? What do you feel like doing?
Let's see. Let's talk about gold a little bit. I think I did want to sort of address that a little bit today. I think.
All right, so
that's
let's
okay.
do some gold.
We got questions. The questions will always be there, right?
Questions
we
will always be there. We always got questions. Want to give the listeners some love, but they already got their love with all the Bitcoin they wanted us to talk about here on the show. As I pull up the old metals here, the precious metals, you guys again can do this for yourself out here in the old Quick Strike. Just head on into cmegroup.com/TWIFO. Go to metals, the precious metals. Obviously, select gold. Make sure you play around with the expirations. When I do this, I like to pull up, obviously the standard ones that come up, but also maybe you want to look a little bit farther out. So you want to throw maybe a little DEES 2018, DEES 2019, DEES 2020 into your mix. Maybe a little June as well as a little mid-year, a little Jan, some of the weeklies. You get a good flavor then of what's really lighting it up out there. I don't put every strike in every month just because it would fill up my screen for days, and we don't have that kind of real estate on this show. But we put all the majors on there. You guys obviously can pick your poison out here. And speaking of a poison, the wasn't too poisonous out here in gold this week. The gold bugs got a little bit of a smile on their face. Not another week of another precipitous sell-off in gold. Actually, a little bit, a slight rally, 5 handles back up to the 1275 level out here. We've been saying for a while, gold vol kind of, at the bottom of its trough, nearabouts, pushing 5-year lows. How much lower could it go? I mean, obviously, vol can always go lower unless it's zero. But that said, you can't be that comfortable selling the vol at these levels. And what we saw this week, similar story to crude, in that we saw a little bit of a rally in the underlying and a little bit of rally in the vol as well. That's not as surprising in gold, though, because gold usually has a nice little bit to the call wing. Vol up fractionally on the week by 0.5 point, 0.75 of a point, vol point here or there. If you're buying some premium, you'll take it. You'll take it because you needed a nice little bump out there. And in terms of what was lighting it up this week, number 1 with a bullet, we go out to DEES 2017 for the pars, the 1,300 calls, even money. Number 1 with a bullet, 12,680 of these bad boys lighting it up. Fairly evenly split throughout the week. A little bit more on Monday at 3,300. The rest pretty much even throughout the week. Of that 12,000 and change, nearly 3,000 opening on the week. So a lot of back and forth action on the 1,300 strike. Not surprising, given the fact that that's where a lot of gold bugs wish we were right now. Coming in at number 2 out here. It falls off a little bit after those pars. We go down about half of that to the 1280s. doing about 6,200 contracts this week. Again, pretty evenly split, at least between Monday and Tuesday. Then it kind of falls off a bit. Only 270 going up today. So a quiet day in the 1280s today, but a hot week. Net pretty much unched from an OI perspective, so a lot of back and forth. Speaking of OI, net OI this week up about 3.3% for all the gold options. So another fairly active, not quite as strong as we've seen in recent weeks, of 5+%, but still a decent OI growth out there. And then we kind of come down to number 4, the 1290 calls. So nice little call strip there. 1280s, 1290s, 1300s. These 1290s lighting it up to the tune of about 4,700 contracts. The lion's share coming yesterday, Thursday, 1,700 of those, 1,000 today. The rest scattered throughout the week. About 1,000 opening net on the week as well. And then only the first puts on our list actually come on the 1260. So not 12 half, not 1275, 1260. Interesting choice. 4,000 and change, pretty much the lion's share coming on Wednesday for 1,100 of those. Net unched from an OI perspective. Hot on its heels, though, were what I expected. The 1275 puts, about almost 4,000 of those going up this week as well. 1,400, the lion's share coming yesterday as well. Again, net almost unched from an OI perspective. So a lot of churning and burning across all that at-the-money front-month stuff there, 1275 puts, 1280 puts, 1280, 1290, and 1,300 calls, all lighting it up, back and forth action across the board here. Let's see, if we look a little bit farther out, let's get out to what we got here. We got Jan of next year, 1345s lighting it up to the tune of about 3,600 of those. The lion's share, 3,100, coming on Monday, most of that opening. So someone opening on a little bit of bullish upside here this week. In good old Jan. Again, we don't know if they were buying or selling those, so take that for what it's worth. But if they are straight up opening to buy, a little bit interesting positioning out there. A little bit farther out, we also saw these are March 13 half calls lighting it up to the tune of 3,000 of those bad boys lighting it up as well. And unfortunately, no crazy outliers this week, Mr. Nick, with the exception. That other gold trade is still pretty much up there for my trade of the year. I don't know what's going to eclipse that in terms of just craziness. But the one big outlier on my screen this week, Mr. Nick, are the Dees 2020 puts. So, yes, all the way out there to 2020. Gold bugs, not going to like this. You may want to cover your ears, even though it looks like there may have been maybe a strangle or something going up with this. Maybe a risk reversal because 200 of the par 1,000 puts lighting it up today. Also, though, same time today, 200 of the 1,500 calls. So that's a weird one because those calls deeply in the money. So if it's a risk reversal, the strikes are a little bit interesting. If it's a strangle, the strikes are still interesting. It's not a ratio, obviously, it's 1-to-1. So this is a bit of a weird one, this 200 lot. I got to assume they're related because it's the only thing trading out in Dees 2020. It's the same day, same size. It's got to be related. Bit of a weird one, Mr. Nick. So if you got any thoughts on that, as well as what else was catching your eye out here in all things shiny stuff this week, sir?
Well, part of the reason I wanted to talk about it was, we talk about the gold range all the time, and today we traded up. I think we were around 1287 at some point. And then we, I think let me look, I'm getting the chart up now. 1287.70. That was last night. And then we traded around, 1286 during the day, a little bit change. And then we came down all the way to 1273. So again, we had this price range, and then we had this drop. We're talking about $14 there, right? So you're looking at typical $10 to $15, $10 to $20 moves, and we mentioned last week how everybody's complaining about there's no trade, there's no volatility, but there are these range volatility trades, and we talk about them all the time. You get near the bottom of a range, vol is low, maybe you do something. You get into the top of range, vol is low, maybe you do something. So what I pushed out there, and the reason I wanted to do that is because I pushed out I did a 27 delta put hedged in December. There's like 15 or 16 days left on 16 and a half days left on that contract. So I hedged it down and around the 1275.80 mark. I paid 4.2 for them, or $420 for it. for one lot, but we'll just call it 4.2 ticks. And, I hedged it, and it's got a 27 delta. And I put the chart out there with the break even. And this is the stuff that I'm always, and again, it's not trade recommendation. It's just trade observation, because, I traded vol for all those years, and I pay attention to vol, and you mostly pay attention when vol's high, and you pay attention when vol's low, or when it's, just sort of where it is. And it's we're in a low vol here. We're at the bottom, not quite the bottom of the range, but we just moved, $15 for whatever reason it was at 11 o'clock today, 10 o'clock today. So let's take a look, put that trade on, and watch it as we go forward and see if we can. And I did a little, it's got to move back. If it moves back up to 1291 and change, you basically broke even with your delta there. And then you get like 15 long deltas by moving up back where we traded earlier in the week, or even earlier in the day. So you can get out of some of those futures and wait for the thing to come back down if you think we're going to range back into the lower side, and then you rehedge yourself, and now you're not long for 4.2 anymore. You're long for maybe 2.2. So this is I wanted to talk about that, because I think it's important to point it out, and we'll try to put out more of these things we talk about as actual trades, so you can take a look at them. And then as far as anything else, we saw the calls catch across the board. We saw the puts get a little cheaper, or probably significantly cheaper in comparison to where they were last week. And we saw the calls get more expensive. So, again, we're in this rangy trade. We still see the vol curve's got a little bit of an upside bias, but there's plenty of opportunities. When you see the puts get cheap and you're on the lower portion of a range, and there's a bias to the calls, both from a volatility curve standpoint and the pull-call ratio, maybe it's time to buy some puts hedge, which is effectively like buying a call anyway, or it's like buying a straddle. If you do one-to-one, it's like turning it into a call. But, there might be some opportunity there. So that's what I wanted to basically address.
Speaking of time, it's time, sir, to get the listeners in on this madness. It's time for the Futures Options Feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app, or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. You guys have a lot of it. Let's get right to it. Vamp111 came in through the chat asking, hey, ciao. Well, ciao, Vamp111, a fellow Italian in there. Good to see you. He says, anyone know exactly when CME Group will launch Bitcoin futures? No, we don't. Kind of alluded to this top of the show. We don't know the exact date. I don't know if they themselves know the exact date. Obviously, all of this is subject to regulatory approval. I get the CFTC to put that golden stamp on it, and when that will happen is a question mark. What they're aiming for, I know what they've announced, is that they're hoping before the end of the year, but that's a pretty rapid time frame. CME and CBOE announced theirs a few months earlier, and they're maybe talking early 2018 now. So they may have a little bit different stuff going on with regulatory approval there, but that's the big question mark. If they can get that golden stamp sometime soon, maybe we'll see these sooner rather than later. But hopefully, I think the plan right now is to have these in your hot little hands before the end of the year. So hopefully you won't have to wait too long. And judging by everyone's eagerness on this, no one wants to wait. Another comment here. This comes from T-Mal in the chat. He says, in my opinion, Bitcoin initially has monster call skew. Let's bring Bitcoin to the masses. That's a good reminder. Let's go check on how our poll's doing. I could see that. I could totally see that. I mean, if zealots aside, I think it looks like an index, but with the crazies, and again, you can't discount them. You got to see how this is going. Right now, Mr. Nick, take a guess how our flash poll on Bitcoin call skew is looking. I gave him the choices of a steep call wing, steep put wing, so a smile, so both the calls and puts are steep, or an index type vol, which is the calls are cheap, puts are expensive. What do you think is winning?
Well, I don't think it's going to be puts expensive, calls cheap. I just say a big put skew with a flat with a slightly bid call. So let's go with the huge put skew.
That is tied for first right now. Steep put wing and smile, so evenly bid to both, are both at 38%. Interesting. Only 13% saying they feel the steep call wing. 11% saying index type skew or investment skew, so cheap calls, high puts. That's only going on for another few minutes, so if you're not listening live, you're kind of out of luck. But that said, interesting stuff. I know this one kind of caught your eye, Mr. Nick, so we'll get to this one from Full Fox. I believe you even tweeted out some graphs in support of your theory here, of your position here. Full Fox asking, hey guys, do you guys prefer iron condor versus iron fly? I know one strategy won't work every time, but what scenario is preferred? Mr. Nick, I've waited on this before, so I'll give you a chance to chime in. I pretty much have extolled my preference for the iron fly many times. My old friend on Volviews, good old Don, used to say that an iron condor is an iron fly for cowards. I kind of like that. I've always liked that saying. If you're going to do that, the setup is favorable enough to do something like this, one of these spreads with wings. You're going to get more meat on the bone for doing an iron fly, but that's it. You know, some people's trading style, I understand if that's a little bit too much for you, a little too close for the fire. It's going to have a lot more gamma, a lot more decay, a lot more movement. So if you don't want that, if you want to sleep at night, you like the cushion of an iron condor, I don't hold that against you. Whatever, to each their own, but I prefer the iron fly. Mr. Nick, where do you come down, and what are your charts saying on this that you're tweeting out to the folks?
Well, you know, what I did was I did a short iron fly and I did a short condor. But I included like I did it for crude, and you can, if you go out there and look on our feed, you'll see the charts. I don't know if I'd say it's the iron fly for condors. I mean, I just was looking at it I didn't have a real opinion other than the fact that I knew what the chart looked like, and mentally I knew what the chart looked like, so I wanted to. And obviously, I thought the premium is going to be less because if you don't include the at the money, you're going to get the lesser premium strikes. So really what you're looking at is what I wanted to sort of see and show people was the break-evens are almost exactly the same when we're looking at these equidistant sort of equidistant set of strikes. So I did the 55, 56, 58, 59 short iron condor, and then the 55, 57, 59 short iron fly. So the break-evens are essentially the same. You're going to get more premium with the short iron, obviously, because you have the meatier options, and you have a risk of a little bit more loss with the iron butterfly, but only by about 15 cents after you get outside your 10-cent shortened break evens. So it certainly seems like, just looking at it very practically, you're better off doing the iron butterfly. The condor is going to give you, most people would think, the condor is going to give me more room from a break-even standpoint, but not really, because you're getting less premium. Therefore, you're going to get a shorter break-even, right? So whatever you're shortchanging yourself on premium, you're shortchanging yourself on break-even. So look at the chart. And I think that's the whole point of why I push it out there, because you can make the decision yourself just looking at that. And this was all created with our new Trade Builder tool, which is soon to be released, which we're really excited about showing people.
Those charts are pretty cool. Always nice to have a little chart backing up my hypothesis there. But yeah, I've always preferred those two. But again, there are scenarios I could see where you want a little bit of that extra cushion. You want to sleep at night. You want to have a little bit of room for an earnings event or a crop report, whatever it is you're trading these things around. So I could see a use case for it. Let's see. We're coming up against it. Let's get some quick ones here. Here's JNL09, Mr. Nick. They're not buying what you're selling when it comes to Bitcoin vol. They say, I'm not sure about that Bitcoin implied vol stated on the show last week. He was sure it was at least 200. Mr. Nick, he's calling your integrity into question, sir. What do you have to say to that?
Well, I mean, I was sure it's at least 200, but did he or she look at the numbers?
So, of course not. He's just responding on Twitter. Social media is not about data. It's about feelings and guts.
Right. It's about just what your feelings are, right? My sense is, I think our friend John Nelson's listening today, and he and I.
Oh, is this him? Is this him? Is this his handle? Is he giving you a hard time? Is he blowing you some smoke?
No, I don't think this is him. But him and I will talk again, and we'll address this next week. But I'm pretty sure it's not that high.
We'll have to get him on the show one of these days so he can.
Yeah, we do. We do.
It's been a while since we had Mr. Nelson on talking. I think the last time we were talking skew in soybeans. So it's been quite some time since we've had the man on. Let's see. I think we got to roll on out of here, sir. We got a lot of questions. We'll save more. Keep those questions coming. We read them all. We don't have a chance to answer them all on the show. We'll try to answer them maybe in the interim or on social media, or we'll save them for something else. But keep those questions coming. We read them all. We'll try to respond as many as we can, even if we don't get to them on the show that week. All right, everybody. That music means we've come to the end of it. You guys asked for it. You got it. You got all the data we can give you kind of on Bitcoin futures right now, because they don't technically exist yet, let alone the options on them, because those aren't even really in the planning stages as of yet. At least not officially announced. Of course, we'll get some more data from the CME folks. We'll get them on the show so they can clarify exactly what their plans are, maybe some expected launch dates, why they went with the 5 Bitcoin contract. All the questions that we and you guys probably have, we'll ask them. So maybe we'll get you guys to put together some of your questions for that. We'll line up some of the guys to answer them here on the show in the near future, because one thing we all know is you guys can't get enough of all things crypto. And Mr. Nick, if I, for example, can't get enough of all things Quick Strike, if I've tried out the free stuff over there at the old Quick Strike Essentials and I say, you know what? I need the full fire hose. I need these trade data. I need all this good stuff that you guys put up. I need to really get to the pro version. Where should I go? What should I do, sir?
Well, thank you for that. I mean, again, we always strive to make sure that you have plenty of good stuff out there for free, and you're going to get probably more good stuff coming in the very near term as well. But if you want to go out there and take a look at the full professional version, we call it, you can go to Bantix, B-A-N-T-I-X, B as in boy, A-N-T-I-X.com, and you will be shuttled to the Quick Strike informational page, and you'll be able to start your free trial there. So go take a look and see what you think, or send us an email at info@quickstrike.net, QUIKSTRIKE.net, and I'm glad to answer any questions you have. But free stuff's always going to be good, so keep an eye out there as well.
Free stuff is great. I always tell Nick he gives away too much good stuff for free. But if you're trading this stuff actively, quasi, semi, even professionally, I don't honestly know how you're doing it without this platform. A lot of brokers, their data, their offerings on the futures and futures options side, let's say it's sometimes a little bit behind the times. So you got to supplement that. How do you do that? You go over to Quick Strike at www.bantix.com. You see a bunch of links in there to get the full kit and caboodle. Trust me, you're looking at all this stuff we're talking about, skew, everything else, how the call and put wings move independently of each other, all these other charts and data and all the other great stuff. Bantix.com to learn more. And of course, if you want to check it out for yourself before you do, www.cmegroup.com/TWIFO. You see that one, then you head on over to Bantix, upgrade to the full kit caboodle. You also see it over there. If you're trading through CME Direct, you can see a lot of his data there as well. All right, and on behalf of Mr. Nick and our friends over there at CME, and indeed myself, I thank all of you out there for voting in our poll this week. All you Bitcoin heads out there and everyone else out there chiming in with your questions, your comments, your insights, or products you want us to cover. We love all you guys, and we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.